Well. Welcome. This is Easy Forex Chart Analysis. So today we are also looking at volatility 10-1x as regards to this week's trading. All right. So today is Tuesday. A new week began on Sunday. You know that every Sunday a new week candle begins. So let's just say what was Sunday's date? Let me check. Sunday was 27th. Okay, so we are looking for the 27th candle. 26, 27, 26, 27. Okay, so this is the candle 27th. So this is the candle, all right, this particular candle. So this was this week's candle. We began from this candle. So this is that high and the low. So that was Sunday's high and low. Sunday's high and low. All right. So that is just that. But let's start off by doing our structural markings. Very well. So from here, let me just start from this side. We had this low being liquidated. Price swept this low. As you can see here, we came below that low but refused to close a body below. And right after that, we've had our change of character here. So you can call it a chalk, or you can call it a market structure shift. Let me put it on top and center it. So right after that, we had a break of structure. We broke this high to the upside and we kept breaking the highs. All right, so this high was also broken. So we had this BOS, and we had this one as well, BOS as well. So from this break of structure or change of character, we can see that we can't really see any point here that markets use. But if you go down to a lower time frame, we are likely to see the zone that price used as it went ahead to break the structure here. So here we had this low liquidated, price swept the low and refused to close below the low, and we started moving up and we've had a nice break of structure. So this was our low, and we had this high, and we had this as our higher low, and we had, let's just say, a higher high. And what market did right here was to take out this low as it was pulling back down into the range to give us our new higher low right here. Okay, so this is a new higher low and this is a new higher high. So we are inside of this trading range, and we want to see where price is retracing to, because for now we have confirmed a bullish market structure, and we want to wait for price to retrace deep into discount before we take a buy. And from this low we pick our premium and discount to, from this low to this high, and below the zero point 0.5 area is where we want to buy from. And what do we find there? We need a demand zone, and we find this demand zone, so we call it a daily order block or demand zone. So that is where we are anticipating a buy. Now, when price comes into your area of value like that, you have to do your liquidity assessment around that zone. You can see that this low was liquidated. We swept this low. We kept sweeping the lows, sorry. And up until this low was established, nothing has been swept. So let me remove this high and low. This low has not been liquidated. All right, so Why once we are inside of this daily order block, we still want to see a liquidity sweep grabbing the lows. Smart money will always want to buy below the lows. All right, so we are waiting for that a candle to trade below and close back within the range, and then we will take our bullish move towards the upside. So that is all that we are waiting for on this. That is all that we are waiting for as far as this asset is concerned. So going down to our 8-hour time frame where we are looking for much more clarity and areas to trade from. You can see that right inside of this our bullish order block where we are waiting to buy from, we have this fair value gap from this candle's low to that high. It's a fair value gap. We dipped into it, but we didn't come into the midpoint. That is the main threshold. So price is currently engineering some liquidity equal lows here, which it will target to sweep before we get a buy move from here. So a confirmation entry is needed right at this spot. So we keep waiting. This is just a fake move to the outside to trap early buyers, because when we go to the lower time frame, we see all these equal lows as a strong support. All right. Let me go to H4. You see those wicks as strong support. Here there was a rejection, here there was a rejection, here there's a rejection. So those who want to buy, the early buyers will see this zone as what? Strong support. So they will buy here and put their stop losses right below the range like that. And that is what smart money or the big traders are going to target to sweep before, if you will buy, we buy. So we are just waiting for that sweep to happen. And then we go to our 15 minutes for a market structure shift and a return to order block or fair value gap for our buy entry. So for now, we keep waiting or waiting if you like. And some people will refine their demand zone to this area, which they are not wrong. From here, we had a sweep of the lows and a break of structure to the upside. A break of structure to the upside. So when you are marking that zone, or if you are marking that zone for your buy position, you are not wrong. You are not wrong. Um, Let me bring it close. So you could see that these lows were liquidated. This was our last low that was formed within this range, and we came to liquidate it and price moved up high. So this candle, this red candle here that did the liquidation, some people will mark that as the order block, and they are not wrong. So if you mark that, then you're going to have to wait further for price to tap into that zone before you buy. So if you are going to look for a trade, you have to look for a turtle soup, a sweep of the high and a failure to close above. Then we will look forward to take a trade towards the downside into this zone where we are going to exit and wait for a buy move. All right. So for today, if you want to trade this asset, you can use this strategy or this entry model. You can any of these highs can be used. Price can just sweep the highs and fail to close above that, and then sell down towards this area that I have indicated here. So that is this. Then one is for us. So I'm still waiting for a buy. I'm still waiting for a buy. So from this low to this high, below the 50% or 0.5%. Let me use the 50 percentage. Let me change the settings to percentage. Percent. So 50%. Below the 50% is where we want to buy from. That is the discount of the range. All right. And right in discount, we find this order block which has not been mitigated. So that is where we are waiting to take our buy position from. So we will buy here upon confirmation. Candlestick confirmation. We put our stop loss right below that. Maybe we add a little buffer for shocks in case price will want to do another liquidation before moving up. So we target this high for our first TP, and then we expect price to break out of that range to the upside. All right, so this is Vix10 1S for us. This is where we are waiting to buy from. So this has been my thought process on this particular asset. If you like the video, make sure you subscribe and share. Thank you. See you soon. Bye bye.